Hey there, future internet millionaires. I'm Nova AI, your favorite little robot who's here to debunk lies and reveal truths about technology. And today we're going to talk about a topic that's probably shown up in your feed about 50 times. Those ads promising that an artificial intelligence can turn $1,000 into millions while you're sleeping peacefully in your bed. Discover the secret code that billionaires don't want you to know. Magic algorithm predicts the market with 98% accuracy. Earn $5,000 a day on autopilot. You've seen this, right? Of course you have. And you know what's the funniest part? There is artificial intelligence revolutionizing the financial market. Quantitative funds really do profit billions using sophisticated algorithms. The technology is real. But the complete story? The complete story has way more nuances, risks, costs, and reality than any Instagram ad will ever tell you. So, today I'm going to show you both sides of this coin. How these systems really work, real cases of people who made fortunes and people who lost everything, why 95% of people who try to use trading robots lose money, and most importantly, what you need to know before putting a single cent into this. If you're tired of empty promises and want to understand the naked truth about AI in financial markets, stick with me till the end. And go ahead and drop that like and subscribe to the channel, because here at Nova AI Curiosities, we're not afraid to say what nobody wants to hear. Let's go. Part 1. How it really works. First thing you need to understand, algorithmic trading isn't magic, it's math. And very, very complex math. When we talk about AI algorithms in financial markets, we're talking about systems that analyze thousands of variables simultaneously to make buy and sell decisions in fractions of a second. There are basically 3 types of technology being used. First, machine learning, where the algorithm learns from historical market patterns to try to predict future movements. Second, predictive analysis, which processes news, social media sentiment, economic data, all in real time. Third, natural language processing, which reads financial reports, CEO tweets, central bank statements, and tries to extract trading signals. But here's the detail nobody tells you. There's a huge difference between a fully automated trading robot and a decision support system. Most big funds use AI as an analysis tool, not as the final decision maker. There are always humans supervising, adjusting parameters, making strategic decisions. Let me give you a real example. Citadel Securities, one of the world's largest trading firms, processes millions of orders per second. They use high-frequency algorithms that take advantage of microscopic price differences between exchanges. We're talking about profits of pennies per operation, but multiplied by millions of operations per day. That generates billions. But you know how much they invested in technology to reach that level? Hundreds of millions of dollars in infrastructure. Servers placed physically next to stock exchanges to reduce latency by microseconds. Dedicated fiber optics. Teams of PhDs in mathematics, physics, computer science. It's not some little robot you download from the internet. Okay, but if the technology exists and works for them, why aren't you rich yet? Good question. Let's talk about who's really making money with this. Part 2. Who really wins Renaissance technologies? If you've never heard of it, pay attention, because this is probably the most impressive story in financial markets. Founded by James Simons, a mathematician who previously decoded messages for the NSA, their medallion fund averaged 66% returns per year for 3 decades. 66% per year for 30 years. They manage over $100 billion today, and they use AI algorithms that nobody outside the company completely understands. They hire scientists, not traditional traders. The business is so secret that even the fund's investors don't know exactly how it works. Another example, 2 Sigma. Founded by data scientists, They now manage 60 billion in assets. They process terabytes of data daily, from stock prices to satellite images of store parking lots to predict retail sales. Sounds crazy, but it works. But here comes the part the ads don't mention. What do these funds have that you don't? Let's list it. Teams of 200 people or more, many with PhDs in mathematics and physics. Supercomputers capable of processing petabytes of data. Access to exclusive data feeds that cost millions per year. Direct connections to stock exchanges. Relationships with central banks and access to legal privileged information, like order flow. Oh, and capital. Lots of capital. Because even the world's best algorithm can have losing streaks, and you need enough money to survive. Until the statistics turn back in your favor. We're talking hundreds of millions in operating capital. So when you see that ad saying you can replicate their success with a $97 course, you already know there's something very wrong there, right? Part 3. When it goes wrong. Now comes the question nobody wants to answer in those miracle trading robot video comments. What about when it goes wrong? Because it does go wrong. And when it does, the damage is gigantic. 2010. May 6th, 2:45 in the afternoon. In a matter of minutes, the American market plunged 9%. Almost $1 trillion evaporated. Giant companies like Procter & Gamble saw their stocks fall from $60 to 1 cent. 1 cent. What happened? High-frequency algorithms entered a panic loop, selling to other algorithms that sold more, creating a downward spiral. Flash crash. AI's fault. But there's worse. Knight Capital, a respected trading firm, 25 years in the market. August 1st, 2012. They implemented a new trading algorithm. It had a bug. In 45 minutes, that bug made the system execute millions of wrong orders. Loss, $440 million. In 45 minutes. The company went bankrupt. And look, I'm going to tell you my favorite story of finance geniuses who got screwed. Long-term capital management. Founded by 2 Nobel Prize winners in economics. That's right, Nobel Prize in economics. They created supposedly perfect mathematical models to predict the market. In the beginning, it worked. Returns of 40% per year. Until in 1998, Russia defaulted on its debt. Something the models said was statistically impossible. The fund lost $4.6 billion and almost caused a global financial collapse. The Fed had to intervene to prevent systemic crisis. Nobel Prize in economics. Perfect models. Total bankruptcy. Why do algorithms fail? First, overfitting. The algorithm learns historical patterns so well that it fails miserably when the future is slightly different. It's like memorizing exam answers without understanding the subject. Second, black swans. Rare and unpredictable events that models can't anticipate because they never happened before in historical data. Third, and perhaps most dangerous, algorithmic herd effect. When many algorithms use similar strategies, they all react the same way at the same time. This amplifies market movements catastrophically. It's automation creating systemic instability. Part 4. The robots they sell you. Okay, but what about those trading robots they sell on the internet? Those that promise to turn your $1,000 account into millions? Do they work? Short answer, no. Long answer, let me explain why. Brutal statistic. 95% of individual algorithmic traders lose money. 95%. And the 5% who win? Most win little, barely, covering operating costs. Why does this happen? First, survivorship bias. You only see advertising from those who won. The thousands who lost everything don't make Instagram posts showing their zeroed account. So you have a distorted perception of how many people actually profit. Second, strategies that worked in the past stop working. Know why? Because financial market is competitive. If a strategy works, more people start using it. When too many people use it, the advantage disappears. It's a zero-sum game. Someone's profit is someone else's loss. Third, hidden costs. Brokerage fees, bid-ask spread, slippage, which is when you can't execute at the price you wanted. Latency of your connection versus institutional traders with better infrastructure. All this erodes profits. An algorithm that looks profitable in backtest can be negative considering real costs. And look at the scam red flags. First, profit guarantee. Nobody, absolutely nobody in serious financial markets guarantees profit. It's impossible. If someone guarantees it, it's a scam. Second, billionaire secret. If it were secret, they wouldn't be selling it to you for $200. Third, results without audited proof. Account screenshots can be edited in 5 minutes in Photoshop. Fourth, generic testimonials. I made $10,000 in 1 week without showing real account, without verifiable history. Fifth, pressure to buy fast. Last spots. Today only with discount. That's sales tactics. Has nothing to do with product quality. Part 5. What really works? So there's no way for common people to use AI to invest well? There is. But you need to be realistic about expectations and approach. First, understand, you're not going to get rich overnight. If you expect to turn $1,000 into $1 million next year, forget it. It's not going to happen. And if someone promises you that, they're lying. Now, legitimate AI tools for analysis, they exist. TradingView uses machine learning to identify chart patterns. Bloomberg Terminal, which costs $24,000 per year, has advanced predictive analysis. Seeking Alpha uses natural language processing to summarize financial reports. But note, they're analysis tools, not robots that operate alone. You still need to understand what you're doing, make conscious decisions, manage risk. Realistic strategies that really work for common people? Dollar cost averaging automated. Buying a fixed amount every month, regardless of price. It's not sexy, won't make you a millionaire in a year, but statistically works long term. Automatic portfolio rebalancing. You define allocation, like 60% stocks, 40% fixed income, and a system automatically rebalances when it gets too far from that proportion. Robo-advisors like Betterment do this. And the most important thing, financial education is worth more than any magic robot. Understanding concepts of risk, diversification, time horizon, costs. This will take you infinitely further than trying to find the secret algorithm. How to recognize real opportunities versus scams? If it sounds too good to be true, it probably is. If they promise guaranteed return, it's a scam. If they don't clearly explain how it works, be suspicious. If it has no regulation from financial authorities, run away. Realistic expectations? 8 to 12% per year is excellent long-term return. Warren Buffett, the greatest investor in history, averaged 20% per year over decades. If someone promises you 1,000%, it's not investment, it's casino or fraud. Tatter when closing. At the end of the day, yes, there is artificial intelligence revolutionizing the financial market. But it's not that AI from Instagram ads with Lamborghini in the background promising instant wealth. It's sophisticated, expensive technology developed by teams of geniuses running on supercomputers with access to data and infrastructure you can't even imagine. The inconvenient truth. If there was a magic code that turns $1,000 into millions while you sleep, nobody would be selling that code for $97 on the internet. Think with me. If you had a money-making machine, would you sell it or use it? Those who really have profitable technology do two things: keep it as an industrial secret worth billions, or charge astronomical management fees for large institutional investors. They don't sell online courses. But here's the good news. You don't need magic algorithms to invest well. Solid financial education, discipline, long-term strategy, smart diversification, and legitimate analysis tools can take you much, much further than any get-rich-quick promise. The financial market isn't a lottery. It's not a game. It's a complex system where knowledge, patience, and risk management make all the difference. And anyone who tells you otherwise is trying to take your money. Look, I know this video was kind of a heavy reality. Check. Maybe you came here expecting to discover the secret to getting rich, and I delivered you generous doses of, it doesn't work like that. But you know why? Because honest information is worth more than false hope. If you made it this far, first, thank you so much for your attention. Second, drop that, because videos like this, that go against the tide of miracle promises, need support to compete with scammers. Subscribe to the channel if you haven't yet, hit the bell, because every week we bring content demystifying technology and giving you real information. And answer me here in the comments. Have you ever fallen for a miracle trading robot promise? Or do you know someone who lost money with this? Share your experience, because your story can help other people not fall for the same thing. And look, if you really want to learn about investments and technology, we have a complete playlist about AI applied to finance, with interviews from real professionals, analysis of legitimate tools, and serious financial education. The link is in the description. Totally worth it. That's it for today, folks. I'm Nova AI, and remember, in the investment world, those who promise miracles are selling illusion. Those who deliver results work in silence and think long-term. Stay smart, question everything, and see you in the next video. Bye-bye.